Hey everyone, how's it going? So today we're going to do some back testing, and the stocks that I've chosen are the IWM and the TNA. And if you're not familiar with these two products, the IWM is basically a ETF of the Russell 2000, and the TNA is just a 3 times leverage product of the Russell 2000 as well. So if the IWM moves roughly 1%, the TNA is going to move 3%, and that's up or down. So let's go ahead and get started. A lot of people like to trade the TNA just because the implied volatility is much higher, but it's really meant for day trading. But let's just look, and I thought we would compare how the two work in both short and long-term time frames. So what we're going to look at, we're going to look at the 6-month, a 1-year, a 2-year, a 4-year, and a 10-year. We're going to look at selling just the 30 delta put. We're looking at 30 days to expiration, and this is going to be done every single week, and we can have up to 6 positions open at one time. And we're not really worried about any of the early profit triggers here. Normally when people are selling cash secure puts, they're selling them to hold until expiration, and then if they take assignment, they'll sell covered calls. So I'm not going to do any of that right here. We could come back at a later date and maybe try this to see what kind of outcomes we get. But anyway, we can see that I already have basically the 6-month range already added in here. So we're going to go ahead and do the 1-year, the 2-year, the 4-year, and the 10-year. Okay, so now let me try to explain what we're looking at here. On the left, we have TNA, and then on the right, we have the IWM, and then we have the 6-month, the 1-year, the 2-year, the 4-year, the 10-year, and then for the IWM, we have the 6-month, 1-year, 2, 4, and 10. We can see that the days to expiration was 30 on all of them, and we didn't worry about doing any stop loss or profit targets. We can see the average profit and loss here, profit and loss per day, average duration of the trade, how many days we were in the trade, and then how many days we were exposed to the market. This tells us how many trades, and we're pretty equal on trades. On the 10-year, we did have a few more trades in IWM than we did in TNA. And then obviously this is our win rate right here, and we can see that the win rate is a little bit higher on the IWM than it is on the TNA. So one thing we can point out here is we can see that on the 6-month and the 1-year and the 10-year, the TNA basically had a better average profit and loss over the IWM. The IWM actually did better on the 2-year and the 4-year compared to the TNA. So the reason I wanted to show the 2-year and the 4-year was because on the 2 and the 4-year, the 2-year obviously we had the crash of 2020, and then on the 4-year we had 2018 in there, and in 2018 the market actually closed in the negative that year. It wasn't a great year, especially towards the end of the year. So that's why I wanted to include the 2 and the 4-year, and we can see that the IWM does just a hair better on the 2 and the 4-year. The TNA beats it the rest of the time. So now we can actually compare how the charts looked. And we can see on the TNA, it's pretty much a straight shot on the 6-month. The 1-year is roughly the same thing. Once we get to the 2-year, we can see what happened during the crash. And then we can see basically it was all the way until April of 2021 that you would have broke even on the TNA on the 2-year. And I'm pretty sure if we go to the IWM 2-year, it actually broke even just a little bit sooner than the TNA did. And then if we look at the 4-year, we can see the 4-year. On the 4-year chart, pretty much from late 2018 all the way until 2020, you were in the negative. And then once we had the crash in 2020, you dropped again. And let's actually compare that to IWM. IWM is kind of the same way. You were at least in the positive during that period of time. But obviously, you can't get away from the crash right there. Now, if we look at the 10-year, this is IWM on the 10-year, and we can see that actually in 2020, we pretty much went all the way down to our starting point. So, 9 years of trading was wiped out right there. And let's look at TNA on the 10-year. So TNA didn't drop fully all the way to zero. But and this is another place where I say the required capital, I believe, is wrong. It's saying on the 10-year, the reason this return on capital is so high, it's showing that we only need $837 required capital to trade this for 10 years. But we're at $15,000 to trade it for 4 years. So I feel something could be done about this required capital. So anyway, that's all I have for you today. If you have any questions or you would like to see other things tested, let me know. I plan to maybe test maybe credit spreads just to see how well they do between these two products. If you have any comments or suggestions, please let me know. Thank you and have a great day.